All right, we are back for another Friday Financial Wrap-Up with Mr. Michael Zuber. How are you, Michael?
I'm doing great, man. Look forward to these every week, especially this week. This one started off wild and crazy on Monday and ended the week just as crazy. So if you weren't paying attention this week was important.
What a wild ride. This is for August the 9th, 2024. Let's get right into it. Yen carry trade. What is that? What does that mean? What is it all about?
Yeah. So uh, we've been doing this a long time together. I never thought that you and I would be talking about the yen carry trade. It's something that's been going on for decades. So simply said, it is something that really works like this. You borrow from a country like Japan, who has very low interest rates, like zero. And then you take that capital and you put it in the United States at 5%, right? You treasuries, and you make a spread. The other thing that happens is if the Japanese yen is getting weaker and the US dollar is getting stronger, you also have this lottery ticket where you get currency devaluation. So for the last several years, if not the last decade, the yen carry trade has been a monster. But what happened last week and over the weekend is the Japan Central Bank, their Federal Reserve, whatever they call that, decided to shock the market and raise interest rates ever so slightly. Now, you make your money on the spread, right? 0 and 5%. Now, Japan only raised rates like 10 basis points or 15 basis points. So it wasn't really enough to collapse the spread. But what it did do is it took that lottery ticket of currency devaluation and turned it into a lead balloon. Because
Wow.
currencies, when they move so rapidly, that can take out all of the gain. And the last thing we'll say about this is the currency market dwarfs the bond market, and the bond market dwarfs the stock market. And one of the reasons it dwarfs it is there's a lot of leverage. Like in the stock market, you could get 50% leverage, for example. In the currency markets, because historically they've been pretty flat, it is not unheard of to have 90% leverage.
Wow.
So if you have a yen carry trade that has worked for a decade and been relatively stable, you just pile on the leverage.
Right.
And then the Bank of Japan comes out and smacks you, and the Japanese Nikkei falls 12% or 16% in a day. It takes the S&P down 1,000 points. The Dow, dude, the Dow down 1,000 points. It was People were selling indiscriminately to raise cash to pay off leverage.
Cover
So if
margin.
Yeah, to cover margin. If you were not paying attention, Monday was wild. And just to kind of round this out, by Wednesday and Thursday, the Bank of Japan basically said, whoops, my bad. I'm sorry. I won't do that again. But yeah, the yen carry trade popped over the weekend, Sunday. And, Sunday here is Monday in Japan. And it took all kinds of pain. It took interest rates down. The 30-year mortgage got as low as like 6.3 because everything just went. It was wild.
Smack. Wow. Okay. Very wild. I got questions, but I'm going to hold it at the end because I know we got a lot of really, really hot topics. We've got some really hot topics here. So let's talk about the 1,000 point drop. You talked about it briefly about the carry trade with the yen. Talk about the 1,000 point drop in the U.S. stock market, that
Yeah.
portion. What did you see there? What are your thoughts?
Yeah. So it's one of the things you have to realize because the market is, I don't know what it's at today, 15,000 or 16,000. It was the first day ever the S&P 500 was down 1,000 points intraday. Now, in hindsight, that's only like 3, 4, 5%, whatever that is. But yeah, the market in the morning Monday was melting down. And again, everybody was selling to cover margin. But yeah, and everybody was freaking out Monday. I mean, it's kind of funny to look back now on Friday and realize it's already over, but it 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 could have gotten really, really ugly.
Very interesting. Very interesting. Now, you teased a little bit on interest rate, 30-year mortgage this week, a rate crash. I know that, we were talking about this last week about rates softening up now. I had asked you some pointed questions about margin and such. What were your thoughts about mortgage rates and rates crashing this week?
Yeah, so rates really crashed hard Monday, Tuesday. They got as low as 6.32. And it's really funny how consumer behavior works. One of the things that I said when rates got that low is the refi boom had just launched. I didn't think they'd go low enough to start purchases, but it was enough to start a refi boom. And unfortunately, a lot of folks said, hey, the rates fell so fast, I'm going to wait for them to fall more. And if you follow up, Tuesday's low to Friday, it's all gone. If you missed it, you missed it.
Yep.
And yeah, rates are back to kind of where they were last, Wednesday, Thursday. So we had a little terror in the market. And when there's fear, everybody runs to the US Treasury. And that means it goes up in value and rates fall. But it's now over. The Bank of Japan seems to have calmed the market. But yeah, I feel bad for people. There are some people that could have done an FHA or VA streamline, gotten something in the fives. And because they thought they would go lower, they didn't pull the trigger and they missed the boat.
Yeah. It's interesting too, because you, of all people, I mean, you've been such an advocate about, knowing your buy box, being ready, preparation, being ready. And that's such a theme of everything you teach, everything you do. And of course, that's what we talk about as well. And so for somebody, there are probably a handful of people in the community and the audience, that listeners and viewers, who did in fact seize the moment on Monday,
Sure.
Tuesday, and then people that missed. When you snooze, you lose. So
Yeah. If you like it, lock it. To think, and again, it's human behavior. When rates fall that fast, your natural inclination is that they will continue to fall.
right.
And it doesn't always work out that way.
Yep. Very, very true. Very true. Let's continue. So let's talk about weekly unemployment. What did you see this week in your thoughts?
Yeah, the one thing I want to talk about before that is the emergency rate cut.
Yeah, let's talk
And
about, actually, I was going to flip them, but you're right. Emergency Fed rate cut. What do you see there? I know a lot of people are calling for it. What's your take on all that?
yeah, so the market's melting down Monday, melting down into Tuesday. And a gentleman named Jeremy Siegel, who we talk about a bunch on my shows, came out and called for the Fed to have an emergency rate cut immediately of 75 basis points and to telegraph another 75 basis points at the next meeting, at the September meeting. So Jeremy was essentially asking for 150 basis point cuts within the next 5 weeks. And that's just, well, let me just say it how it is. That would have been a disaster. It's a crazy disaster for two reasons. First, if the Fed was to cut rate 75 basis points in the panic, in the vortex, it would have actually made the yen carry trade even worse by a factor of 5, 6, 7. We could have seen 5,000 point drops because all that leverage being forced out of the system quickly, because you would have seen the US dollar weaken while the Japan yen strengthened. And that would have it would have been
A whirlwind.
it would have been crazy. I can't even fathom how bad that would have been, because you would have had so much selling to raise capital. But more importantly than the yen carry trade, if the Fed was to cut 150 basis points in the next 5 weeks, what would that signal about our economy? Right? There's a lot of talk about a recession, myself included. But if the Fed steps up and says, hey, we got 150 basis point cuts in the next 5 weeks, everybody's going to say, oh my God, what's broken? And that's just going to cause consumers to retreat and all of these things. Because again, when the Fed starts cutting rates, it's often the start of a recession. So I think a lot of people calling for emergency rate cuts are talking their book. Maybe they're in a lot of pain. Maybe they're in a lot of bad trades. I think an emergency rate cut would be a disaster for many reasons.
Very interesting. Very interesting time. So let's, dude, I am so glad that I'm here with you on every Friday, like, to have an idea, right? We've been talking about this, and we've been talking about it, and now the devil is on the doorstep and things are starting to unravel. And it's good to,
Yeah.
if you're a viewer or listener of the show, a frequent viewer or listener of the show, you've prepared for this.
Mm-hmm.
And we're going to talk about opportunity at the end too. And I've got some really good questions for you. Let's keep going. Weekly unemployment.
So we fast forward for the disaster of Monday, Tuesday, Wednesday. We remember last Friday's the weekly job number being weak. We had last week's Thursday unemployment being nasty at 250. Everybody was lined up going, this is getting bad. The job market's weakening. The job market's weakening. And bam, we got 233. A number that takes us back to the old trend because we had popped up to 240. We went to 250. Now we're back at 230. So there's a lot of talk about last Friday's, spike in unemployment to 4.3, job creation at 118 being a dirty number. Folks may not realize this, but Texas had a hurricane. And there was about a 2-week window where there was a bunch of furloughs, and those count as unemployment and could have impacted the numbers. So one of the things that I wanted to look at to see if that made sense was today's or Thursday's unemployment number, weekly unemployment, and it came back in at trend. So we're back to 230 where we have been for 6 or 7 months. So I don't know. Maybe the job market's okay. It's not great. I'm not saying the job market's great, but maybe it's not falling off a cliff either.
Very interesting. And again, we talk about it every week, and you've been watching it, and we've been talking
That's the
about
number.
this.
Yep.
Yeah,
Watch it
that's
every
the
week.
number. So let's talk about re-explain. This is an interesting point because kind of a new concept to me over the last, 60, 90 days. You've been talking about it more and more. The Sahm rule. What is it? How does it work? And what happened this week?
So Claudia Sahm, she is the creator of this rule. All kudos and all credits to her. She's an economist. And she basically created a rule that's gone 8 for 8. It is called the last 8 recessions. And basically what it says very simply is you take the average of the last 3 unemployment prints. And if that's 0.5% over the cycle low of the last 12 months, you're in a recession. So last Friday, we jumped from 4.1 to 4.3. The calculus behind the Sahm rule has it at 0.53, which is greater than 0.5. So the Sahm rule is triggered. Now, Claudia Sahm has done a great job of coming out and publicly saying, my rule is broken, which is interesting, right? Because she's given all kinds of credit. Her name is in lights, and she's being forthright enough to say, hey, guys, I think the rule is broken. So, okay, what do you mean? So she put out a lot of information, which I've read. And basically what she says is the Sahm rule historically has worked because it shows rate of change of demand, job loss, unemployment. However, given the unique area of our current economy, this time is different. Okay, what does that mean? Well, again, the rule has looked at demand. But if you know anything about economies or economics, it's supply and demand. So her rule is just demand. What has transpired, which Claudia is shining a big light on right now, is supply. We have seen a lot of migration, some legal, some illegal, or I should say a lot illegal and some legal. That additional employment base has caused the unemployment to go up, thus invalidating the Sahm rule. Because again, she is all about demand, supply being relatively consistent. And she's like, guys, this time's different. She did some back of the napkin calculations, and guesstimate is half of the 0.53 is related to supply, not demand. So in her words, don't believe the Sahm rule. We're not in a recession. Her model is broken. So kudos to her.
Very interesting. I think I would subscribe right now to the channel if I'm not subscribed on YouTube. I would subscribe and keep coming back. Michael does the daily financial news. He does we do the weekly wrap up. Let's talk about, we're going to keep going, by the way. So, I've got a couple of really good questions. Odds of a September rate cut. What are your thoughts today?
I think this is such a great conversation because if you go back historically, I'm the guy that was standing by himself going, no September, but 50 in November. Last week, it got so dicey. I was starting to kind of bend and break and go, you know what? Maybe September. I'm back to no. It's going to be October. And again, I say that because I think the job market is okay. I don't think the job market is deteriorating. We have five more inflation prints, 2 next week. Then we get PCE in about 4 weeks, 3 weeks, and then we get 2 more CPI or 1 more CPI, 1 more PPI reading. I don't know. I think there's a chance that Jerome Powell grits his teeth and has no cuts in September. I mean, look where the market is. Look where the job market is. Inflation is still too high. Now I know there's a lot of people bitching and complaining and whining and saying, "Give me a half, give me a half, give me a half." I think those are the same people that wanted 7 cuts in January.
Yeah.
I don't know how you cut today with the data that we have in front of us.
Very interesting how significant that unemployment number is. And then you have world events, basically,
Of
other things
course.
happening in the economy.
Yeah.
So
And let's be clear, that Bank of Japan, that yen carry trade where we started, if that got out of control, the Fed may have been forced to cut. But that seems to be the genie seems to be put back in the bottle.
and that's really, that was my big question. My big ending question is, okay, so yen carry trade, I would look at that almost like a black swan event, something that's
For
very
sure.
unique. Is that
Absolutely.
okay?
No, yeah. The closest thing I would equate it to, if you wanted to look it up, was long-term capital management. That was essentially a hedge fund. I think Michael Milken was involved. I think that had a lot of leverage, and it went sideways, and it took them down and others. I would think the yen carry trade was even bigger than long-term capital management, but it's kind of that event, like it comes out of nowhere and pops, and then all of the contagion just takes down other people. It could have been like that.
So, and that's really kind of my follow-up question is, so if we look at this and look at like, say, 2008, AIG, TARP bailout, also even maybe even just throwing out saying as an example, last year, 18 months ago, we had Silicon Bank failing. We had, several small regional banks failing. Is there that, I mean, basically looking at even maybe a tie together with commercial real estate debt, um, do you see anything out there in the future, and that how this yen carry trade potentially ties into commercial real estate debt and or regional banking and or another Lehman Brothers or AIG? Just your general thoughts and takeaway on that.
Yeah. Well, if you were to ask me this Monday afternoon when this was all on fire, this could have been a Lehman moment, which was the event that created the Great Recession. By Wednesday morning, when the Bank of Japan relented and said, "Whoops, my bad," and there was no follow through, it seems like the pain that was felt by some, but there was no contagion. We would have been heard about the contagion already, and you would have seen more indiscriminate selling. And to that point, the bank of the Nikkei, which I think was down 16% on Monday, had a record Tuesday on the upside,
Yes.
right?
Recovery,
So
full recovery.
yeah, it seems that way to me. We learn more over the weekend, because again, one of the things you have to know about our banking sector is they shut banks down on Friday, which gives them the weekend to kind of clean them up. I'm not saying there will be a problem, but we'll know by the end of day, Friday, if there is any. I don't think there will be, but if there is somebody that got caught, we may hear about it on, Friday afternoon.
Very interesting time. So let's talk about opportunity. Let's talk about our community. Where's the opportunity in all this? And what is your
Yeah.
declaration to a one rental at a time investor, maybe somebody looking to buy a home right now, people with dry powder? What is your thoughts about opportunity?
Yeah, this week was wild, especially when we saw mortgage rates collapse. There was a part of me that's like, "Oh my God, if we go sub 6, my buyer's market call might blow up." We never did. We never got below 6.3. So my thesis stands. It's a buyer's market. We're seeing inventory build. We're seeing days on market extend. What I know about a slower market or buyer's market is, I promise you, there are motivated sellers out there, and it's your job to find them. Write offers, follow up, do the work, get creative, learn all these things. We're still in a buyer's market. I will admit, on Monday and Tuesday, I was a little bit nervous that it could have been over already. But, rates jumped back up. Inventory still building. Refi demand exploded, which I expected, but purchase only went up 1%. So I think the buyer's market is intact. I think it gets slow. I think July sets a cycle low below 3.88. And I don't think it gets much better the rest of the year. So, but again, I say that, and you should only hear opportunity, opportunity, opportunity. That's what I want my people to realize.
Opportunity, opportunity. How should people get involved with the One Rental at a Time community?
I think there's two ways to do it today. One is you got to join school. It's $20 a month. It's $20 a month on purpose to keep away the trolls. Only people interested in doing the work are in there. We're now almost 220 members. I think 224 actually. I checked this morning. So we're really starting to ramp up. Introduce yourself. We have 2 accountability groups. We have weekly calls with millionaires. You have an entire playlist of past millionaire conversations that are only on school, not on YouTube. So there's hundreds of dollars a month in value there in new stuff created, not to mention a Wednesday and Sunday accountability group, in free education, 10-week boot camp, masterclass on creative financing, and more. So do that. And then if you want to do some in real life, we just launched tickets for our February event in Vegas. We're going to go 450 people strong. We've already sold over 50 tickets. I want to sell this thing out in a month so that I can just focus on the agenda, the surprise guests, the special things. But yeah, you can either join school or buy the event or do both.
I love it, Michael. Michael, thank you for all that you do. I want to say everybody out there, get involved with school. $20, take it for a test drive. Michael, have a great weekend. Thank you for all that you do, brother. Thank you.
Later.